Apple is building its own iPhone modem. Does that crush Qualcomm? Short answer, not today. And Qualcomm's locking in new growth from AI PCs, cars, and even data centers. Plus, the dividend just went up. Let's break it down. Welcome back to Dividend Stock Scout. Each Sunday, we share one screen dividend idea or a quick portfolio update, sometimes both, with clear risk rules. Today's pick is Qualcomm, QCOM. As always, this is educational and not financial advice. We will use a 20% trailing stop loss to make sure we minimize any losses that we have, and we keep our rules simple. So Qualcomm still builds the wireless brains for smartphones and earns licensing fees on its patents. But the bigger story now is 3 new lanes: laptops, so AI PCs, cars, and AI data centers. That reduces the risk that it has by losing Apple and adds to a longer cycle of revenue. So laptop AI PCs like Copilot and PCs are rolling out with Qualcomm Snapdragon X chips, and more successors are on the way. There's dozens of designs from major brands, which means this isn't a one-off, and the PC refresh cycle typically lasts a few years, but it recycles, right? And each design win can stick for multiple model generations. That gives Qualcomm a second pillar next to phones. Now, let's talk about cars. This is an interesting one. Modern cars are computers on wheels. Qualcomm supplies the digital cockpit, basically, the connectivity, the driver assist, the SOS. My car even now has the ability to set up a communications hub with Wi-Fi in the car with Verizon, which is crazy. So auto programs typically run 5 to 10 years. So wins here are going to bring visibility and stickier revenue than iPhone upgrade seasons. As more models ship with Qualcomm inside, the content per vehicle, the hardware and the software, will compound. Now, data centers. We all know that right now with AI, cloud computing, and all that, data centers are crazily popular, extremely expensive to make. So Qualcomm's platforms target the side of AI, so serving models efficiently with strong performance per watt. Even a few large deployments can move the needle, and inference workloads repeat over time, creating a potential for recurring orders. So that opens the door to enterprise and cloud budgets well beyond phones. So ultimately, what we're talking about with Qualcomm here is more diversified lanes, less dependence on any single customer such as Apple, and a high quality revenue mix. Longer product cycles in PCs and autos can smooth out the lumpiness of handsets, while AI data centers add a fresh, high growth tailwind. So something that probably wasn't expected a year or two ago. So let's take a quick look at a snapshot of Qualcomm. So the price as of close on October 31st, when I took this snapshot, was $180.90. So if we are able to get it around that number, we'll have a 20% trailing stop, that initial stop at entry, at around $144.72. So it's got a lot of room to run. Now, the dividend is currently sitting at 89 cents per share quarterly. Its next dividend executable date is December 18th for those that are on record as of December 4th. And with that 89 cents quarterly dividend, you're looking at an annualized dividend of approximately $3.56 per share. So not too shabby. That puts the yield around 1.97% at this current price. So of course, as the price goes down, that yield might increase, but it's also really good to know that management is confident in what they have in the pipeline, and they've actually increased their dividend. Their 12-week momentum looks healthy. It's about 22.6% since early August. Now, I'll be honest, when I looked at that, that did give me pause because that means we've missed out on a lot of growth in the last few months. So something for us to just kind of keep an eye on if things start to pull back. But on the flip side of that, it's only selling at 17 times P/E for the last trailing 12 months. So I think that's reasonable for a cash-rich chip leader. Oh my Lord, those things just weren't rolling off the tongue. And free cash flow. So at around $11.2 billion last year in free cash flow, that means if times get a little bit rough, they'd still have a little bit of cash in reserves to be able to figure things out along the way. So again, these are snapshot figures as of October 31st. So always make sure you're checking the live numbers every day before you're purchasing and setting your stop loss, because your numbers might differ a little bit of mine from when you got into the trade. So again, we have three simple drivers: on-device AI and Android leadership. Qualcomm keeps pushing premium Android with new Snapdragon 8 flagship chips, better AI graphics and battery across many operating systems. We have AI PCs at scale, so those push leans on Snapdragon X today, with next generation platforms in the pipeline and dozens of laptop designs. And then we have the automotive side. I guess we can't forget about the Internet of Things as well, right? Those things have been growing fast, with record auto revenue turning into a second engine outside of phones. Now let's dig into this Apple question a little bit, right? Are they making their own chips? Yes and no, not all at once. So Apple has begun a staged rollout of in-house modem technology in select iPhones. At the same time, Qualcomm still has chip supply agreements into 2026 and a patent license through 2027. Apple unit exposure can decline over time, but licensing continues, and Qualcomm has been diversifying, so it doesn't rely on Apple alone. Yes, that will create an impact on their bottom line, but those three things that we've been talking about with AI PCs, AI data centers, cars, Internet of Things items, those are going to keep driving and replacing that Apple revenue. Of course, competition is tough. In data centers, Qualcomm faces competition from things like NVDA or AMD. In PCs, it's got competition from Intel, AMD, and Apple. And in handsets, the big problem there is that the smartphone cycle can slow, especially as innovation isn't really transforming things so much in that area anymore. Things have been pretty much the same besides new designs for quite a while. So if Apple's in-house modem ramps up faster than expected, that could be a headwind that we'll have to watch. So we'll watch the segment mix, the gross margins, and the design wins that Qualcomm has from this point going forward. So as always, as we jump into this investment, we want to make sure whether we're putting in a 20% trailing stop. That keeps the downside simple, right? So 80% of the buy price is if it hits that number, we're out. Now, of course, we've just gotten started with our portfolio, right? It's only been a couple weeks. So here's what we currently have in our portfolio. We have our buy dates. So the last two that we did were Lowe's and Aflac. Our buy price for Lowe's was $243.82. It currently closed at $238.19. So we've lost about 2% give or take here on that current pick. Now Aflac, we bought about on 107.25 and it currently is sitting at 107.2. So we've lost about, a half of a percentage point. And Qualcomm we're just getting into. So we'll definitely fill this in for next week of what our buy price was, what our highest price was during the week and when it closed at. But currently no dividends on record, and our portfolio is down around 2.3%. So not a great first week, not a bad first week, just kind of a very standard first week, but that's okay. We don't want a lot of market fluctuations, and really this is about dividend investing, so that way basically our money can work for us. It's a great source of passive income, and that's what we're shooting for. So hopefully these stay stable, and we'll be able to collect some dividend returns in the process. So again, here's a little recap for you, why Qualcomm passes my screen today. So the price action over the last few months shows steady accumulation, yet the stock still trades at a reasonable earnings multiple backed by a really strong free cash flow. Management just recently raised the dividend this year, so we're getting paid while we wait. And the business mix actually keeps improving. Auto and Internet of Things are setting records, AI PCs are scaling with Snapdragon, and Qualcomm now has a toehold in AI data centers for inference. Even as Apple brings more of their modem work in-house, Qualcomm's licensing continues, and the company has multiple growth engines: phones, PCs, cars, cloud. So it keeps moving that story forward. That combination of momentum, cash returns, and diversification is exactly what I want in a dividend name. And with our trailing 20% stop, we let the winners run while managing the risk. So that's Qualcomm for you. If you like the process, one idea a week with clear rules, tap subscribe and hit the bell. Want me to screen your favorite ticker? Drop it in the comments. Remember, education only, not financial advice. Hope you have a great week.